Hey everybody, George Chamberlain here today with our business report. This month of October is an interesting month. It can be extremely volatile. And there is sort of this specter, this ghost of stock market crashes from the past that always lingers in October. As I'm recording this on the 28th of October, we're celebrating, I guess you could say, the 85-year anniversary of one of the biggest stock market crashes. It happened in 1929. And it was, in many people's opinion, the beginning of the Great Depression, not the Great Recession, but the Great Depression. And that was so bad because there were no protections built in back then. We didn't have government regulators watching over the financial markets. People who had money in banks, remember one of the things that came out of the stock market crash was a run on the banks. Why were people running to take their money out of banks? Because there was no insurance. The Federal Deposit Insurance Corporation had not been in existence back then. And so if a bank failed and you had money in that bank, you simply lost the money. Okay? So we saw some good things come out of that. There was no Social Security back then. We went through the Great Depression into the early 1930s, and under the direction of President Roosevelt, we did a lot of things to protect consumers and investors. And then again, when we had the crash in 1987, October 19th of 1987, there were no protections in place to stop a massive sell-off. Out of that came some circuit breakers and other things like that. So, well, we don't always like to have government get involved with everything. Protecting consumers and investors from those crisis events that just do happen, rarely, but they do happen, I think is a pretty good thing. With today's Money News, I'm George Chamberlain. Have a good one.